Like, super exciting to be here. Even with the amount of people here, I've been to the past couple Litecoin summits, so it's just really exciting to get to see a lot of familiar faces. I've been doing this now for, or I guess this, I've been in crypto, building in crypto, being a part of crypto for almost 12 years now. So every single bear market, every single bull market, basically all of it, I've been a participant in. And one of the things I really want to talk about today, I found it so interesting that in talking about this, and a lot of my experience is actually in payments, but I cannot tell you how much rage and frustration and challenge there is around, the global banks and the banking system and the Federal Reserve and everything else. And I've just found that it's very, very misunderstood. And so to be able to harness, let's maybe even say that rage and put it in the right place and make crypto even more successful, I found this sort of information is something I really like to talk about. So, so I mentioned I've been in crypto for a while. I saw the original post that Charlie made on Bitcoin Talk, so that was something I had read even when it initially had come out. I've started other payments companies, so I resonated with this immediately, particularly around the quicker block times and something for payments. So payments especially resonated with me. And then again, when you get into crypto and you start talking about anything with the banks, everyone hates the banks. And there's all this rage of conspiracy theories and everything around the banks and the Illuminati and the evilness and all the conspiracy theories, right? All the various elements around what is really behind money and how it works and the global banking system. And so when you see today, especially when you look even previously in 2008 and the structural issues that arose in the banking systems and the pain that we felt from that, and household debt, increasing debt, and especially now, probably higher household debt than ever before. Also at the verge of, as people are talking about, potentially significant recession. Are the banks to blame for this, right? Are the conspiracies true? Is there actually something here behind all of this? So what I want to go into is, so first off, like, what do banks actually do? What should they do, right? What part do they even play in all of this, besides all of the memes? And then even starting off now, a lot of this has now been really embraced by like kind of crypto history, crypto lore, crypto memes. And so there's a lot of really cool information here that I'll share. You might have even been able to see before, but so where did even banks come from in the first place? So if you've read about it or are familiar, they come from Goldsmiths. So Goldsmiths, this isn't a really foundry, well, just a team of tradesmen. They would just make stuff out of gold. They'd make jewelry, they'd make coins. And people started to figure out that there was this intense meme value of gold. So it's really funny. Gold actually doesn't have any value whatsoever other than the value that we ascribe to it. We find it valuable, we think it's interesting, we use it in trade, therefore it has value. And there's very common features that get talked about all over around its stability. It's chemically stable. It means it doesn't tarnish, so it looks nice. It's workable. You can mint it into coins very easily at reasonable temperatures. It's value dense. You can pay for high value items in small amounts of denominations or sort of weight or the amount of coins you need to have with you. And it's scarce. And so people found this very relevant to be able to pay for things and start using it as currency. So that happened. And then with anything else, there starts to become some limitations, right? It's very hard to divide coins. It's hard to make change. The safety component is actually very significant because now if I'm walking around with a whole pocket full of gold coins, that opens me up to robbery, theft, and other things. Verification, sure enough, the fraudsters come in. There's various gold alloys, there's impurities. So, it's not always just the best. So there are some challenges. And so, but it was valuable. So now people stepped in. A goldsmith, they said, I can solve some of these problems. I'm going to mint gold coins with my personal stamp on it, with my very intricate designs, and now you can believe me or trust me that this gold now represents what it is. So the purity, the weight, and so people started using these coins based on the trust that the goldsmith created. And they had very ornate designs, right? So these are some samples from the photo I actually took in a museum in Venice in the 1300s and 1400s. These were actually minted by the ruling class at the time called the Doges. So these are like literal Doge coins, which I'm surprised hasn't been talked about a lot more, but yeah, these are literal Doge coins, the original ones from the 1300s, and that's what they looked like. They're very ornate, hard to copy, and this is so important, and that money is fundamentally and almost exclusively based on trust, and trust alone. If you trust that something's going to have value, you trust that something is what it is, and now you can use it as a currency, as a medium of exchange, this is what it's all about. And so gold fulfilled that for us. And now the third problem started to get solved, which was, now I have all these gold coins, I want to be able to store them. So the goldsmiths already had all the gold, they already had all their tools, they already had a very secure environment. They said, okay, well, I'll just hold the gold for you on your behalf. So now when people had all this gold, they would now pay the goldsmiths to hold it for them, which seems insane. Those are essentially negative interest rates, but that's common. It actually is becoming even more prevalent in crypto storage, crypto security, paying someone to basically custody crypto for you. So this is where it all originated from. And you got bearer receipts. And so these are some samples, and that goldsmiths would write out these really ornate certificates that said, here's the amount of gold that you can come and redeem for me at some point in the future. And naturally, people just started using those certificates rather than the gold itself, because now it was way easier to just take these pieces of paper and walk around all over with the paper and use them as to trade rather than the actual gold. And so that's where the whole as good as gold expression even came from. It originated from just now using pieces of paper. And this is also the origination of banknotes. This is literally what it was, is that you're minting certificates based on a bearer instrument based on gold. So this is now the beginning of banking. This is a bank now. So he has all of your gold. He writes the receipts for your gold. Those receipts get now issued out in the world and used as trade and used as currency. There's nothing stopping this guy whatsoever from making as many of these receipts as he wants. And that would now, today, get more talked about fractional reserve banking, but that's exactly what they did. So they said, I'm going to write out as many gold receipts as I'd like. You have to trust me anyway. And then, by the way, I can loan them to you, and I'll earn a whole bunch of interest on top of it. So it's extremely, extremely profitable. But there is one problem, and then if you get too carried away, this is what you'd have as a bank run, right? Let's say you issue twice as many certificates as the amount of gold that you have, and everyone comes back to actually redeem all of the gold simultaneously, your business is gone. And not only does your business go away, it actually would collapse the entire economy of which this is based, because all those certificates now no one would trust. So the trust underpins the entire system. If they got carried away with it, they would literally collapse the entire system. Everything would just completely fall apart. So they need to protect themselves against bank runs. So what did they do? They created a central bank. And so now a central bank comes into play. They work with all of the other banks. And so now what they've done is essentially minimize the chances of any sort of a bank run. So now if one of the banks has a whole bunch of customers come back in and they want to redeem all those gold certificates, the central bank borrows funds from one of the other member banks and then distributes it out to the bank that is less solvent than the others, which is kind of weird because this is exactly how decentralization works, but I guess that would be a story for another time. But this is the central banking model. And now that also had some problems. And this is where then it gets very interesting, or the start of where the interest kind of gets built in. Every bank issued their own certificates, right? So every member bank that would be brought in as this consortium for a central bank had their own very unique and intricate regional or bank-specific certificates to claim the gold. That would be impossible based on the model that I just said. So they had to basically all come together, eliminate that, get one unified currency that they could all issue and redeem sort of between all of the banks. And then that meant someone had to have the power to be able to basically create the money. And so that is very true. And so now the central bank has the authority essentially to create the money which all of the other banks use, which is where all of this stuff comes from. Because when you have a system like that of, oh, there's going to be one person, one entity, or one group that can now control all of the money, that is just ripe for conspiracy theories, and quickly people jump on that of, oh, of course this is now going to be extremely corrupt, and they're going to abuse this, and we're the ones that are going to be the ones left holding the bag. Let's see. But it really isn't that interesting. At the end of the day, when you look at it more objectively, the bank's role is really just a financial intermediary. They're sort of this boring middleman, and all they're really doing is basically using value in a productive way, which I'll describe in a little bit more. But if you really do look at it objectively, as rife as this is for conspiracies, it actually is considerably more boring than you would suspect. But if that's the case, then why the hell are these things so incredibly powerful, and why do they have so much money, and why are they the ones always at the forefront when we have all these other economic downturns, and they're the ones that are always at the forefront, but they're the ones that everyone realizes has all the money, all the power, all the prestige. So how is that possible if it's really this boring and they're just this regular financial middleman? Well, there's one more ingredient, and this was, if you're familiar, way back in 1944, after World War II, without going into all the details here, the Bretton Woods Conference, the largest countries in the world all came together and they said, we're now going to create a reserve currency, which is now the US dollar. And at the time, dollars were then redeemable by gold. So any dollar that you had could now redeem it through the United States government for gold. And the majority of the countries, the largest countries in the world, agreed that they were now going to adopt this system. Until 1971, where Nixon just said, no, we're not going to use the gold standard anymore. And this ushered in the entire new chapter, which is what fiat currencies are. So we're going to keep all the systems the same, reserve currencies the same, but no more gold. And so this is where the story takes its final interesting turn, which is, we've already seen this before, so there's nothing new. We had this Goldsmiths said, I can write as many of these certificates as I want. It doesn't matter how much gold I have. It's now evolved into a system of, I can now create as much money as I want just using a keyboard and the spreadsheet that I'm going to introduce money. It doesn't matter how much money I actually have, because now in this fiat system, I can do that as a bank. So what happened now is we went from store of value and our definition of what that could be, from maybe it's gold, maybe it's cash, to right now, in the truest sense of the word, store of value, at least in the United States, is a value in a spreadsheet in a bank. That's literally what our store of value is today, is that if I say I have money, we all talk about money, it is literally an entry on a bank's ledger that you can view on your app and see how much money you have. That's our store of value. And you'd argue and you'd say, well, why the hell does that have any value? You just told me it doesn't have any value. They click a button on a spreadsheet, and it's because he says it has value. So all the banks, when you go and you borrow money, they make you pay all that money back in interest. Also, that's denominated in dollars, so you have to pay dollars back upon the dollars that you borrow. Then the government just straight up says, we're going to charge you taxes, and if you don't pay us the taxes in dollars, we're just going to put you in prison. And so that generally works. So that's why dollars have value, and so that's where the store of value has now come from. Which now everyone will kind of rage into, oh, well, all money is debt. All money is debt. This is terrible, terrible system, and maybe it's exactly the same as we had before. We had this guy, right? He essentially just created gold derivatives. That's all he was doing, right? Took in the gold, he created their certificates, and that's literally what the definition is. So it just evolved into this. This guy just makes cash derivatives, right? Same utility, same general instrument in terms of what it's looking to achieve. And so then the question, or what's interesting about this, is you actually get the reverse problem of what we had before. So when you have like debt-based economies, whereas before we had the potential bank run, now we actually have the reverse. If you look here, basically the red line is the national debt we have as of 2020 in the US, and the blue line is the amount of money that literally exists to be able to pay off that debt or not pay it off. So as we stand right now, it's literally impossible to pay off all of the debt that exists in the United States. It's literally impossible. The money doesn't exist. So it's kind of like the reverse bank run problem, where banks actually don't want you to pay off your debt because you can't. It's literally impossible to do. So it's like a reverse bank run. So does that just mean the entire debt-based economy? Does this mean it's all doomed, right? Is this like saying, I have a credit card, I have debt, I'm going to pay off my credit card with another credit card, and I'm just going to keep going around and around, and that's always the way it's going to be. This system is absolutely doomed to fail. Well, not necessarily, because when you think about it now as how you incur that debt, it's really just how you can create additional production or productive activity from that debt. Easy examples would be education. A lot of you could have gone into debt to fund an education, which arguably is very, very worth it in the long term around how much production or growth you earn or create based on incurring that debt. Same thing for all different sorts of investable businesses. If you're starting a business, you've raised money, you bring in money, add an amount of debt, you end up producing more than the amount of debt that you incur, that's actually a win. So if you look historically, we've been able to squeak by that. What this looks like in the future, we'll continue to see, but as long as the actual productive value or growth in an economy exceeds that amount of debt, it's kind of okay. Right? And I'm not trying to judge either way. I'm just looking purely objectively and when we think about it in your own experience, like how this actually could kind of make sense. And one thing to even think about, how you start making the system even better. So without dooming this whole debt cycle even further, it's really about how you invest those assets. So you want to invest in growth. And so investing in growth, a lot of that would even be in the community itself. The more you start investing in the community, so in this example, if you invest, if there's like a mortgage on a house, that's actually a non-productive asset from overall economy. So if banks are just funding mortgages, that does not help the graph that I just showed you. Whereas if they're investing in small businesses, it does. It actually helps tremendously because that's where the growth comes from to overset those debt rates. So this is becoming more and more prominent where smaller regional community banks are actually like a major answer for being able to help drive this forward by investing in their communities, by understanding the smaller businesses and the people in these communities where the large, ultra large banks aren't going to be able to service those people. They're not going to be able to understand them. They're not going to have all the credit histories where in a community you actually will understand this. So basically, investing in your community, investing in growth, investing in the support of this community is really what helps the system start to thrive. And beyond that, banks are really just an engine for growth. They're a really boring, extremely boring, I can't tell you how boring, even deep, this is the surface. All they do is they're capital allocators. They take money and they just direct it towards something that can achieve growth. And that's really it. So despite all the wild conspiracies and things that are often out there and the way that people try to frame this, the government currencies and inflation and all these other things, everyone wants to be an expert. When you really look at it objectively, at least the core system, I'm not saying it's good or it's bad, but at least objectively you can look and see there are ways for it to actually be fairly successful to the individual participants, the communities, and then kind of greater community as well. So now, finally wrapping up, like what the hell does all this mean for what we're doing here in crypto, and how does this even affect us, and how do we play a role within the system or external to the system? Well, if all you do is you step back, again, we're humans, we do the same thing over and over, nothing changes. So if you just look at this chart, it's all exactly the same. So just look at crypto. Okay, we're gonna rewind. I already showed all these charts before. Some really cool technology comes out. Let's say it's blockchain, distributed ledgers, whatever we wanna substitute in, top left-hand corner, that gets invented. It has some money-like qualities in terms of its stability, its mineability, mintability, how it can have that value density. It's scarce, it's desirable, it's some asset that people actually then want to have. They start using it, it starts looking like money, people start using it as currency, then it has some limitations, right? In terms of maybe privacy, scalability, whatever the factors around mainstream adoption that are limiting, let's say, crypto as a currency. Then third parties step in and they say, oh, I can offer my trust to make this better. It can be a wallet, it can be some other sort of service, it can be a node, it can be anything in between that allows you to now use that currency or use that asset better than ever before with some of the trust involved. Then you start adding in the other third-party layers, Look at something like Coinbase, for instance, or other third parties that would hold assets for you. We talked about PayPal, we talked about other payment providers. They're the ones that are in place that are custodying assets, that are now using them for you on your behalf. Then getting into the final state where it's, oh wow, these derivatives or these other instruments, right, where I have a balance on PayPal, it says I have Litecoin, or I have a balance on Coinbase, it says I have Litecoin, I'm using this and this is becoming valuable to me, which then all just starts coming full circle. So now you can go into having the previous gold derivatives and then cash derivatives. Now we have Bitcoin derivatives, and these are all over the place. And so if you don't have any wrapped Bitcoin on Ethereum, which has already been minted to the tune of billions of dollars of Bitcoin derivatives that now exist, they're also then used on something like Compound or Aave, issuing billions and billions of dollars of loans. The whole system is exactly the same. As much as we like to try to convince ourselves that it is different, and we're doing all these other radical changes, fundamentally the system, it's not. And that's not to say that some of these assets or what we're all here for is not different and there aren't virtuous components that do make it more unique, but the overall system, it's all exactly the same game. This has been played, since we can remember. And so when we come here, this is why it gets exciting. You have Litecoin, has those money properties exactly as we talked about earlier. So it's technically stable, just even talking here around the longevity of proof of work and how stable these assets have been and all the uptime around using these assets, the fungibility, the value density, the scarcity, all those, check, 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 right? So we know that we're really sitting in this currency-like money instrument. And now you have sort of the end where I was talking about investing in your community. Investing in the community, making that more valuable is really what starts to accelerate this and become more growth and value creation. And so these are the elements we've talked about literally today. I literally made these slides like 2 hours ago. So I put them all in. This is stuff we talked about literally today. The Lightning Network upgrades from before. SegWit was the very first, or Litecoin was the first chain to enable SegWit back before Bitcoin when they were exploring that. We talked about Mimblewimble, all the other merchant acceptance to now give the utility that Litecoin can now have, all of the mainstream adoption. These are all community-generated initiatives, making the community more valuable, making Litecoin more valuable, ultimately then giving what I believe to be most important around freedom of choice, of still being able to work within the existing system, but now ascribing value of what I want to find valuable and what I want to use and what I want to transact in my community and the people I want to work with, ultimately establishing the very most important thing, as we talked about before, trust. Trust is the only thing that matters around any asset and any currency then being valuable, and I think we can get there, as we have. So in this community, this summit, all those other ingredients, I think we're getting there, and it's super exciting. So, and then hopefully the price obviously naturally can go from there, but I think this is a mission that we can believe in. This is super exciting, and it competes and fits in with all the existing narratives and structure that we have, which is also really good. So